Our first story begins in Jacksonville, where claims adjuster Beauregard worked for Pinnacle Insurance Company handling property damage assessments for 12 years. He built a reputation for thorough investigations and fair settlements, earning trust from both clients and supervisors. When Hurricane Isabel devastated the coastal region, homeowner Evangeline filed a claim for extensive roof and water damage to her family residence. Mr. Beauregard seemed genuinely concerned about our situation and promised a comprehensive evaluation of all storm-related damages. Evangeline recalled about their initial meeting. He spent hours documenting everything and assured us the claim would be processed fairly and promptly. However, weeks passed without any settlement offer, and Evangeline discovered that Beauregard had been deliberately undervaluing damage assessments while pocketing kickbacks from preferred contractors who offered lowball repair estimates. Internal investigation revealed he had been coordinating with corrupt contractors to minimize claim payouts, collecting substantial bribes, while homeowners received inadequate settlements that left them unable to properly repair storm damage. The scheme particularly harmed elderly homeowners and families with limited resources who trusted the adjuster's expertise and couldn't afford to challenge his damage assessments. Over 18 months, Beauregard had fraudulently reduced claim settlements by an average of 40% while collecting over $60,000 in contractor kickbacks, leaving hundreds of hurricane victims with insufficient funds to restore their damaged homes and forcing many into financial hardship. Our second story takes us to Denver, where auto insurance adjuster Clementine specialized in vehicle collision assessments and total loss determinations for Metropolitan Insurance Group. She had worked in claims adjustment for 9 years and was known for her detailed accident reconstructions and precise damage evaluations. When college student Ignacio's car was severely damaged in a multi-vehicle accident, Clementine inspected the wreckage and initially seemed thorough in her investigation. She took extensive photos and measurements, explaining that she wanted to ensure accurate assessment of all collision-related damages. Ignacio remembered about the inspection process. Her professional approach gave me confidence that my claim would be handled properly. But Ignacio soon learned that Clementine had been manipulating accident reports and falsifying damage assessments to minimize payouts, while collecting bribes from salvage yards that purchased totaled vehicles at below-market prices. She would deliberately misclassify reparable vehicles as total losses, then ensure the salvage company received valuable cars for minimal compensation while policyholders received reduced settlements. Investigation uncovered that Clementine had been operating this scheme for 3 years, defrauding over 200 accident victims out of fair settlements while collecting approximately $45,000 from corrupt salvage operations. Her fraudulent assessments cost policyholders an estimated $800,000 in reduced claim payments. Our third story unfolds in Atlanta, where disability claims adjuster Ferdinand handled workers' compensation cases for Reliable Benefits Corporation, evaluating injury claims and determining benefit eligibility. He had 15 years of experience and was trusted to make fair determinations about workplace injury compensation. When warehouse worker Millicent suffered a severe back injury from a forklift accident, Ferdinand conducted what appeared to be a thorough medical review and disability assessment. He seemed knowledgeable about workplace injuries and assured me that legitimate claims always received proper consideration. Millicent explained about their initial consultation. His experience and professional manner convinced me that my benefits would be handled fairly. However, Millicent discovered that Ferdinand had been deliberately rejecting valid disability claims while accepting payments from employers who wanted to minimize their workers' compensation costs. He would falsify medical reviews and misrepresent injury severity to deny benefits to legitimately disabled workers. The conspiracy involved corrupt medical evaluators who provided biased assessments supporting claim denials in exchange for referral fees. Investigation revealed Ferdinand had fraudulently denied benefits to over 300 injured workers while collecting nearly $75,000 from employers seeking to reduce their compensation liability. His actions left seriously injured workers without income or medical coverage during their recovery periods. Our fourth story brings us to Phoenix, where health insurance adjuster Genevieve processed medical claims and prior authorization requests for Premier Health Insurance, determining coverage for treatments and procedures. She had worked in medical claims for 8 years and was responsible for ensuring appropriate use of healthcare benefits. When cancer patient Omar submitted claims for expensive chemotherapy treatments, Genevieve initially approved the necessary medical procedures and seemed supportive of his treatment plan. She explained the approval process clearly and seemed committed to ensuring I received the cancer care my doctor recommended. Omar recalled about their early interactions. Her knowledge of medical procedures gave me confidence in the insurance review process. But Omar later learned that Genevieve had been taking bribes from pharmaceutical companies to deny coverage for expensive medications while steering patients toward cheaper, less effective treatments that benefited her corporate partners. She would falsify medical necessity reviews and misrepresent treatment options to reduce insurance payouts while collecting kickbacks from drug manufacturers. The scheme particularly harmed cancer patients and others with serious medical conditions who needed specific medications for effective treatment. Investigation showed that Genevieve had inappropriately denied coverage for over 500 medical treatments while collecting approximately $55,000 from pharmaceutical companies, forcing patients to pay out of pocket for necessary medications or accept substandard treatment alternatives. Our fifth story takes place in Seattle, where commercial property adjuster Horatio evaluated business insurance claims for enterprise risk insurance, assessing fire damage, theft losses, and business interruption claims. He had 12 years of experience and was known for his expertise in complex commercial property assessments. When restaurant owner Prudence suffered extensive fire damage that forced her to close temporarily, Horatio conducted what seemed like a comprehensive investigation of the business losses. He appeared very professional and knowledgeable about restaurant operations, spending considerable time evaluating our equipment damage and business interruption costs. Prudence remembered about the claims process. His detailed approach suggested our claim would receive thorough consideration. However, Prudence discovered that Horatio had been deliberately undervaluing commercial property claims while accepting bribes from restoration companies that wanted exclusive access to large repair contracts. He would minimize damage assessments and underestimate business interruption losses to reduce claim payouts, then ensure his preferred contractors received the restoration work at inflated prices. Investigation revealed that Horatio had been operating this fraud for 4 years, reducing commercial claim settlements by an average of 35% while collecting over $80,000 from corrupt restoration contractors. His scheme cost business owners approximately $2 million in reduced claim payments while forcing many to accept inadequate settlements that couldn't cover full restoration costs. Our sixth story occurs in Miami, where life insurance claims investigator Lysander specialized in death benefit investigations and beneficiary verification for Eternal Security Life Insurance. He had worked in life insurance for 10 years and was responsible for detecting fraudulent death claims and ensuring proper benefit distributions. When widow Tabitha filed a claim following her husband's sudden death, Lysander conducted what appeared to be a routine investigation into the circumstances and beneficiary documentation. He was respectful and understanding during a very difficult time, explaining that the investigation was standard procedure to protect all policyholders. Tabitha recalled about the claims process. His professional demeanor gave me confidence that my husband's benefits would be handled appropriately. But Tabitha learned that Lysander had been deliberately delaying legitimate death benefit payments while accepting bribes from investment firms that wanted temporary access to insurance funds for unauthorized speculation. He would prolong investigations unnecessarily and create bureaucratic obstacles to prevent timely benefit distributions, allowing corrupt financial partners to use insurance reserves for profitable investments. The scheme particularly harmed surviving spouses and children who needed immediate access to life insurance benefits for living expenses and debt payments. Investigation uncovered that Lysander had inappropriately delayed over 400 death benefit payments, while his investment partners profited from temporary access to approximately $3 million in insurance funds, causing severe financial hardship for grieving families during their most vulnerable periods. Our seventh story unfolds in Chicago, where marine insurance adjuster Quincy handled boat and yacht damage claims for Oceanic Marine Insurance, evaluating collision damage, storm losses, and theft claims for watercraft owners. He had 15 years of maritime insurance experience and was trusted to assess complex marine casualties. When yacht owner Russell suffered extensive damage during a severe storm, Quincy inspected the vessel and initially seemed knowledgeable about marine repair requirements and insurance coverage. He appeared very experienced with yacht damage and spent considerable time evaluating our boat's condition and repair needs. Russell explained about the assessment process. His maritime expertise gave me confidence that our claim would be handled by someone who understood boat insurance. However, Russell discovered that Quincy had been manipulating marine damage assessments while collecting kickbacks from boat salvage companies that wanted access to valuable vessels at below-market prices. He would exaggerate damage severity to justify total loss declarations, then ensure corrupt salvage operations acquired expensive boats for minimal compensation while owners received reduced settlements. Investigation revealed that Quincy had been operating this marine fraud for 5 years, inappropriately declaring over 100 boats as total losses while collecting approximately $95,000 from salvage companies. His fraudulent assessments cost boat owners an estimated $4 million in reduced claim settlements, while valuable vessels were sold to conspirators for a fraction of their actual worth. Our 8th story brings us to Dallas, where aviation insurance adjuster Sebastian evaluated aircraft damage claims and pilot liability cases for Skyguard Aviation Insurance, handling complex aerospace insurance matters. He had worked in aviation insurance for 11 years and was respected for his technical knowledge of aircraft systems and accident investigation. When private pilot Stephanie crashed her small aircraft due to mechanical failure, Sebastian conducted what appeared to be a thorough investigation of the accident's circumstances and aircraft damage. He seemed very knowledgeable about aviation and spent extensive time examining the wreckage and pilot records. Stephanie remembered about the investigation process. His expertise in aircraft systems gave me confidence that the mechanical failure would be properly documented. But Stephanie learned that Sebastian had been falsifying accident reports while accepting payments from aircraft manufacturers who wanted to avoid liability for design defects and mechanical failures. He would blame pilot error instead of documenting equipment malfunctions, protecting manufacturers from costly liability claims while pilots faced increased insurance premiums and potential license actions. The conspiracy involved corrupt aircraft mechanics who provided false maintenance records supporting pilot error conclusions in exchange for referral fees from manufacturers. Investigation showed that Sebastian had inappropriately blamed pilots for over 60 accidents that were actually caused by aircraft defects, while collecting approximately $120,000 from manufacturers seeking to avoid product liability. His fraudulent reports cost pilots millions in increased insurance costs and damaged reputations while dangerous aircraft defects remained unaddressed. Our 9th story takes place in Las Vegas, where crop insurance adjuster Montgomery assessed agricultural losses and weather damage claims for harvest protection insurance, evaluating farming and ranching insurance matters. He had worked in agricultural insurance for 13 years and was known for his understanding of farming operations and crop loss calculations. When drought devastated farmer Tyler's wheat crop, Montgomery surveyed the damaged fields and initially seemed knowledgeable about agricultural conditions and insurance coverage. He appeared very familiar with farming and spent considerable time evaluating our crop losses and weather impact. Tyler recalled about the assessment process. His agricultural background suggested our drought claim would be handled by someone who understood farming challenges. However, Tyler discovered that Montgomery had been deliberately undervaluing crop damage while accepting bribes from grain companies that wanted access to damaged crops at below-market prices. He would minimize loss assessments and underestimate yield reductions to reduce claim payouts, then ensure preferred buyers acquired damaged grain for processing at discounted rates. Investigation revealed that Montgomery had been operating this agricultural fraud for 6 years, reducing crop insurance settlements by an average of 40% while collecting over $70,000 from grain processing companies. His scheme cost farmers approximately $5 million in reduced claim payments while corrupt buyers profited from acquiring damaged crops at artificially low prices. Our 10th story occurs in Portland, where cyber insurance adjuster Veronica handled data breach and technology claims for Digital Shield Insurance, evaluating cybersecurity incidents and business technology losses. She had worked in cyber insurance for 7 years and was trusted to assess complex technology insurance matters. When law firm Wayne suffered a major data breach that compromised client information, Veronica investigated what appeared to be a comprehensive review of the cybersecurity incident and business impact. She seemed very knowledgeable about cybersecurity and data protection, spending considerable time evaluating our breach response and business interruption costs. Wayne explained about the claims process. Her technology expertise gave me confidence that our cyber claim would be properly assessed. But Wayne learned that Veronica had been manipulating cybersecurity assessments while accepting payments from technology vendors who wanted exclusive access to breach response contracts. She would minimize data breach impact and underestimate business interruption losses to reduce claim payouts, then ensure her preferred vendors received lucrative recovery contracts at inflated prices. The scheme particularly harmed small businesses that couldn't afford to challenge technical assessments or hire independent cybersecurity experts. Investigation uncovered that Veronica had been reducing cyber insurance settlements by an average of 50% while collecting approximately $65,000 from technology contractors over 3 years. Her fraudulent assessments cost businesses over $2 million in reduced claim payments, while corrupt vendors profited from exclusive access to breach response work. Our 11th story unfolds in Boston, where professional liability adjuster Xavier evaluated malpractice claims and errors and omissions cases for professional risk insurance, handling complex liability insurance matters for doctors, lawyers, and other professionals. He had worked in professional liability for 14 years and was respected for his understanding of professional standards and malpractice law. When surgeon Zoe faced a malpractice lawsuit alleging surgical errors, Xavier conducted what seemed like a thorough investigation of the medical procedures and professional standards involved. He appeared very knowledgeable about medical malpractice and spent extensive time reviewing surgical records and expert opinions. Zoe remembered about the investigation process. His understanding of medical procedures gave me confidence that my defense would be properly handled. However, Zoe discovered that Xavier had been manipulating malpractice investigations while accepting bribes from plaintiff attorneys who wanted access to confidential defense information. He would leak privileged investigative findings and settlement strategies to opposing counsel, undermining professional liability defenses while collecting payments from corrupt lawyers. Investigation revealed that Xavier had been compromising professional liability defenses for over 100 cases while collecting approximately $150,000 from plaintiff attorneys seeking unfair advantages in malpractice litigation. His betrayal cost professional liability insurers millions in inflated settlements while medical professionals faced damaged reputations and increased malpractice premiums. Our 12th story brings us to Houston, where environmental insurance adjuster Dahlia assessed pollution liability and environmental cleanup claims for EcoGuard environmental insurance, evaluating contamination incidents and remediation costs. She had worked in environmental insurance for 10 years and was known for her expertise in pollution assessment and cleanup regulations. When manufacturing company Sterling discovered soil contamination at their facility, Dahlia investigated what appeared to be a comprehensive evaluation of the environmental damage and cleanup requirements. She seemed very knowledgeable about environmental regulations and contamination assessment, spending considerable time evaluating our pollution liability and remediation needs. Sterling's environmental manager explained about the claims process. Her expertise in environmental law gave us confidence that our cleanup claim would be properly handled. But Sterling learned that Dahlia had been deliberately undervaluing environmental claims while accepting kickbacks from remediation contractors who wanted exclusive access to lucrative cleanup projects. She would minimize contamination assessments and underestimate cleanup costs to reduce claim payouts, then ensure preferred contractors received environmental remediation work at inflated prices. The conspiracy involved corrupt environmental consultants who provided biased contamination assessments, supporting reduced settlements in exchange for referral fees. Investigation showed that Dahlia had been reducing environmental insurance settlements by an average of 45% while collecting over $110,000 from remediation contractors over 5 years. Her fraudulent assessments cost businesses approximately $8 million in reduced claim payments while environmental contamination remained inadequately addressed, potentially threatening public health and safety. Our 13th story takes place in San Francisco, where earthquake insurance adjuster Elena specialized in seismic damage assessments and geological insurance claims for Pacific Seismic Insurance, evaluating earthquake damage and structural engineering issues. She had worked in earthquake insurance for 12 years and was trusted to assess complex seismic insurance matters. When major earthquake damaged apartment building owner Francisco's property, Elena conducted what seemed like a thorough investigation of the structural damage and seismic engineering requirements. She appeared very experienced with earthquake damage and spent considerable time evaluating our building's condition and retrofit needs. Francisco recalled about the assessment process. Her seismic expertise suggested our earthquake claim would be handled by someone who understood structural engineering. However, Francisco discovered that Elena had been manipulating earthquake damage assessments while collecting bribes from construction companies that wanted exclusive access to seismic retrofit contracts. She would exaggerate structural damage to justify unnecessary repairs, then ensure corrupt contractors received lucrative retrofit projects at inflated prices while property owners paid excessive deductibles. Investigation revealed that Elena had been operating this earthquake fraud for 4 years, inflating retrofit costs by an average of 60% while collecting approximately $85,000 from construction companies. Her scheme cost property owners over $6 million in unnecessary repairs and excessive deductibles while corrupt contractors profited from fraudulent seismic retrofit projects. Our 14th story occurs in Nashville, where entertainment insurance adjuster Garrett handled event cancellation and performer liability claims for showbiz protection insurance, evaluating concert cancellations, venue damage, and entertainment industry losses. He had worked in entertainment insurance for 9 years and was known for his understanding of show business and event production. When music festival promoter Isabella faced massive losses from weather-related event cancellation, Garrett investigated what appeared to be a comprehensive review of the cancellation circumstances and financial losses. He seemed very knowledgeable about event production and weather insurance, spending considerable time evaluating our cancellation costs and revenue losses. Isabella explained about the claims process. His entertainment industry experience gave me confidence that our cancellation claim would be properly assessed. But Isabella learned that Garrett had been deliberately undervaluing event cancellation claims while accepting payments from venue operators who wanted to avoid paying cancellation fees and vendor refunds. He would minimize revenue loss calculations and underestimate cancellation costs to reduce claim payouts, protecting venue partners from financial obligations while event promoters received inadequate settlements. The scheme particularly harmed smaller promoters and independent artists who couldn't afford to challenge technical assessments or hire entertainment industry experts. Investigation uncovered that Garrett had been reducing entertainment insurance settlements by an average of 55% while collecting over $90,000 from venue operators over 3 years. His fraudulent assessments cost entertainment industry clients approximately $4 million in reduced claim payments while corrupt venues avoided their contractual obligations. Our 15th story unfolds in Minneapolis, where kidnap and ransom insurance adjuster Julia evaluated security incidents and extortion claims for global security insurance, handling complex international security insurance matters. She had worked in kidnap and ransom insurance for 8 years and was respected for her crisis management expertise and international security knowledge. When Executive Kenneth's family member was kidnapped while traveling abroad, Julia coordinated what seemed like a professional response to the security crisis and ransom negotiations. She appeared very experienced with international security incidents and crisis management, providing guidance during an extremely difficult situation. Kenneth remembered about the kidnapping response. Her security expertise gave us confidence that the ransom situation would be handled professionally. However, Kenneth discovered that Julia had been manipulating security crisis responses while accepting bribes from private security companies that wanted exclusive access to high-value protection contracts. She would prolong crisis situations and inflate security costs to maximize payments to preferred contractors while families endured extended trauma and uncertainty. Investigation revealed that Julia had been operating this security fraud for 3 years, inflating crisis response costs by an average of 70%, while collecting approximately $140,000 from security contractors. Her scheme cost families over $5 million in excessive security fees, while prolonging dangerous situations and increasing trauma for kidnapping victims and their relatives. Our 16th story brings us to San Diego, where sports insurance adjuster Kevin handled athlete injury claims and sports liability cases for athletic protection insurance, evaluating sports injuries and performance insurance matters. He had worked in sports insurance for 11 years and was known for his understanding of athletic injuries and sports medicine. When professional athlete Lauren suffered a career-threatening injury during competition, Kevin investigated what appeared to be a thorough evaluation of the medical circumstances and career impact. He seemed very knowledgeable about sports medicine and athletic injuries, spending considerable time reviewing medical records and career projections. Lauren recalled about the claims process. His sports background gave me confidence that my injury claim would be properly assessed. But Lauren learned that Kevin had been manipulating sports injury assessments while accepting payments from team owners who wanted to minimize disability payouts and salary obligations. He would underestimate injury severity and career impact to reduce claim settlements, protecting team financial interests while athletes received inadequate compensation for career-ending injuries. The conspiracy involved corrupt sports medicine doctors who provided biased medical evaluations supporting reduced settlements in exchange for team medical contracts. Investigation showed that Kevin had been reducing sports insurance settlements by an average of 40% while collecting over $75,000 from team organizations over 4 years. His fraudulent assessments cost athletes approximately $3 million in reduced disability payments, while sports organizations avoided their insurance obligations to injured players. Our 17th story takes place in Denver, where art insurance adjuster Marcus evaluated fine art damage and theft claims for Masterpiece Protection Insurance, assessing valuable artwork and cultural artifact insurance matters. He had worked in art insurance for 13 years and was trusted to evaluate complex art insurance claims and authentication issues. When museum director Nicole discovered that valuable paintings had been damaged during a gallery exhibition, Marcus conducted what seemed like a professional investigation of the artwork condition and restoration requirements. He appeared very knowledgeable about fine art and conservation, spending considerable time evaluating our painting damage and restoration needs. Nicole explained about the assessment process. His art expertise suggested our claim would be handled by someone who understood cultural artifacts. However, Nicole learned that Marcus had been manipulating art damage assessments while collecting kickbacks from art dealers who wanted access to damaged artwork at below-market prices. He would exaggerate damage severity to justify total loss declarations, then ensure corrupt dealers acquired valuable artwork for minimal compensation while owners received reduced settlements. Investigation revealed that Marcus had been operating this art fraud for 5 years, inappropriately declaring over 50 artworks as total losses while collecting approximately $125,000 from art dealers. His fraudulent assessments cost collectors and institutions over $8 million in reduced claim settlements, while valuable cultural artifacts were sold to conspirators for fractions of their actual worth. Our 18th story occurs in Phoenix, where construction insurance adjuster Melissa handled builder liability and construction defect claims for BuildGuard Insurance, evaluating construction accidents and building defect insurance matters. She had worked in construction insurance for 10 years and was known for her understanding of building codes and construction practices. When homeowner Omar discovered serious foundation problems in his newly built house, Melissa investigated what appeared to be a comprehensive evaluation of the construction defects and repair requirements. She seemed very knowledgeable about construction and building codes, spending considerable time evaluating our foundation problems and structural issues. Omar recalled about the assessment process. Her construction expertise gave me confidence that our defect claim would be properly handled. But Omar learned that Melissa had been deliberately minimizing construction defect claims while accepting bribes from builders who wanted to avoid liability for shoddy workmanship and code violations. She would blame homeowner maintenance issues instead of documenting construction defects, protecting builder reputations while homeowners faced expensive repairs for structural problems. The conspiracy involved corrupt building inspectors who provided false inspection reports supporting homeowner fault conclusions in exchange for future inspection contracts from builders. Investigation uncovered that Melissa had been inappropriately denying construction defect claims for over 200 homes while collecting approximately $95,000 from builders seeking to avoid liability. Her fraudulent reports cost homeowners millions in denied claims and out-of-pocket repairs, while dangerous construction defects remained unaddressed, potentially threatening structural safety. Our 19th story unfolds in Atlanta, where product liability adjuster Penelope evaluated consumer injury claims and product defect cases for consumer safety insurance, handling complex product liability insurance matters. She had worked in product liability for 12 years and was respected for her understanding of product safety regulations and consumer protection law. When consumer Rachel suffered serious injuries from a defective appliance, Penelope conducted what seemed like a thorough investigation of the product failure and safety circumstances. She appeared very knowledgeable about product safety and consumer protection, spending extensive time evaluating our appliance defect and injury circumstances. Rachel remembered about the investigation process. Her expertise in product liability gave me confidence that my injury claim would be properly assessed. However, Rachel discovered that Penelope had been manipulating product liability investigations while accepting payments from manufacturers who wanted to avoid costly product recalls and safety improvements. She would blame consumer misuse instead of documenting product defects, protecting manufacturer profits while injured consumers received reduced settlements and dangerous products remained on the market. Investigation revealed that Penelope had been inappropriately denying product liability claims for over 300 injury cases while collecting approximately $130,000 from manufacturers seeking to avoid product safety obligations. Her fraudulent investigations cost consumers millions in denied claims while dangerous products continued injuring people without proper safety warnings or design corrections. Our 20th story brings us to Seattle, where travel insurance adjuster Reginald handled trip cancellation and travel emergency claims for Global Journey Insurance, evaluating travel disruptions and emergency assistance matters. He had worked in travel insurance for 9 years and was known for his understanding of international travel and emergency services. When family Robert's European vacation was disrupted by medical emergency, Reginald coordinated what appeared to be appropriate emergency assistance and trip cancellation coverage. He seemed very experienced with travel emergencies and international assistance, providing guidance during a medical crisis abroad. Robert explained about the emergency response. His travel expertise gave us confidence that our emergency situation would be handled professionally. But Robert learned that Reginald had been deliberately undervaluing travel claims while accepting kickbacks from travel service providers who wanted exclusive access to emergency assistance contracts. He would minimize trip cancellation costs and underestimate emergency expenses to reduce claim payouts, then ensure preferred providers received lucrative assistance contracts at inflated prices. The scheme particularly harmed travelers facing genuine emergencies who needed immediate assistance and couldn't challenge technical assessments while dealing with medical crises abroad. Investigation showed that Reginald had been reducing travel insurance settlements by an average of 45%, while collecting over $68,000 from travel service providers over 3 years. His fraudulent assessments cost travelers approximately $2 million in reduced claim payments, while corrupt providers profited from exclusive access to emergency assistance work. Our 21st story takes place in Las Vegas, where casino insurance adjuster Rosalind evaluated gaming liability and patron injury claims for entertainment risk insurance, handling complex casino and hospitality insurance matters. She had worked in gaming insurance for 11 years and was trusted to assess casino liability and patron safety issues. When visitor Samantha suffered serious injuries from defective casino equipment, Rosalind investigated what appeared to be a professional evaluation of the accident circumstances and liability factors. She seemed very knowledgeable about casino operations and safety regulations, spending considerable time evaluating our equipment failure and injury circumstances. Samantha recalled about the investigation process. Her gaming expertise suggested our injury claim would be handled by someone who understood casino liability. However, Samantha discovered that Rosalind had been manipulating casino liability assessments while accepting bribes from gaming companies who wanted to minimize patron injury settlements and avoid safety improvements. She would blame patron behavior instead of documenting equipment defects and safety violations, protecting casino profits while injured patrons received reduced compensation. Investigation revealed that Rosalind had been inappropriately reducing casino liability settlements by an average of 50% while collecting over $105,000 from gaming companies over 4 years. Her fraudulent assessments cost injured patrons approximately $4 million in reduced claim payments while dangerous casino conditions remained unaddressed, potentially threatening patron safety. Our 22nd story occurs in Chicago, where political risk insurance adjuster Sterling handled international investment and political violence claims for global political insurance, evaluating overseas business disruptions and political insurance matters. He had worked in political risk insurance for 10 years and was respected for his understanding of international business and political analysis. When Corporation Stephanie's overseas facility was damaged during political unrest, Sterling assessed what seemed like a comprehensive evaluation of the political circumstances and business losses. He appeared very experienced with international political risk and business disruption, spending considerable time evaluating our facility damage and political insurance coverage. Stephanie's risk manager explained about the claims process. His international expertise gave us confidence that our political risk claim would be properly handled. But Stephanie learned that Sterling had been deliberately undervaluing political risk claims while accepting payments from foreign governments who wanted to minimize compensation for business disruptions and political violence. He would blame business operational factors instead of documenting political circumstances, protecting government interests while businesses received inadequate settlements for political losses. The conspiracy involved corrupt political consultants who provided biased political analysis supporting reduced settlements in exchange for future consulting contracts from foreign governments. Investigation uncovered that Sterling had been reducing political risk settlements by an average of 60%, while collecting approximately $150,000 from foreign political interests over 5 years. His fraudulent assessments cost international businesses over $10 million in reduced claim payments, while political violence and business disruption risks remained unaddressed. Our 23rd story unfolds in Miami, where yacht insurance adjuster Tobias specialized in luxury vessel damage and marine liability claims for Prestige Marine Insurance, evaluating high-value watercraft and maritime insurance matters. He had worked in luxury marine insurance for 12 years, and was known for his expertise in yacht construction and marine engineering. When yacht owner Vanessa suffered extensive damage during a severe storm, Tobias inspected what appeared to be a thorough evaluation of the vessel condition and repair requirements. He seemed very knowledgeable about yacht construction and marine engineering, spending considerable time evaluating our boat's damage and restoration needs. Vanessa recalled about the assessment process. His maritime expertise suggested our yacht claim would be handled by someone who understood luxury vessel insurance. However, Vanessa discovered that Tobias had been manipulating luxury marine assessments while collecting kickbacks from yacht brokers who wanted access to damaged vessels at below-market prices. He would exaggerate damage severity to justify total loss declarations, then ensure corrupt brokers acquired expensive yachts for minimal compensation while owners received reduced settlements. Investigation revealed that Tobias had been operating this luxury marine fraud for 6 years, inappropriately declaring over 30 yachts as total losses while collecting approximately $160,000 from yacht brokers. His fraudulent assessments cost yacht owners over $12 million in reduced claim settlements while valuable vessels were sold to conspirators for fractions of their actual worth. Our 24th story brings us to Dallas, where oil and gas insurance adjuster Victor evaluated energy industry claims and drilling accident cases for petroleum risk insurance, handling complex energy insurance matters. He had worked in oil and gas insurance for 14 years and was trusted to assess drilling accidents and energy facility damage. When energy company Wayne suffered a major drilling accident that caused environmental damage, Victor investigated what seemed like a comprehensive evaluation of the accident circumstances and cleanup requirements. He appeared very experienced with drilling operations and environmental regulations, spending extensive time evaluating our accident response and cleanup obligations. Wayne's safety director explained about the claims process. His energy industry expertise gave us confidence that our drilling accident claim would be properly assessed. But Wayne learned that Victor had been deliberately undervaluing energy industry claims while accepting bribes from environmental cleanup companies who wanted exclusive access to lucrative remediation contracts. He would minimize accident impact and underestimate cleanup costs to reduce claim payouts, then ensure preferred contractors received environmental remediation work at inflated prices. The scheme particularly harmed smaller energy companies that couldn't afford to challenge technical assessments or hire independent environmental experts. Investigation showed that Victor had been reducing energy insurance settlements by an average of 55% while collecting over $120,000 from cleanup contractors over 4 years. His fraudulent assessments cost energy companies approximately $15 million in reduced claim payments while environmental contamination remained inadequately addressed, potentially threatening public health and safety. Our 25th story takes place in Boston, where pharmaceutical insurance adjuster Wilhelmina handled drug liability and medical device claims for medical innovation insurance, evaluating pharmaceutical liability and healthcare product insurance matters. She had worked in pharmaceutical insurance for 11 years and was respected for her understanding of drug development and medical device regulation. When patient Zoe suffered serious adverse reactions from a defective medical device, Wilhelmina conducted what appeared to be a thorough investigation of the device failure and medical circumstances. She seemed very knowledgeable about medical devices and pharmaceutical regulation, spending extensive time reviewing our device failure and medical records. Zoe remembered about the investigation process. Her medical expertise gave me confidence that my device liability claim would be properly evaluated. However, Zoe discovered that Wilhelmina had been manipulating pharmaceutical liability assessments while accepting payments from drug and device manufacturers who wanted to avoid costly product recalls and safety improvements. She would blame patient factors instead of documenting device defects and safety violations, protecting manufacturer profits while injured patients received reduced settlements and dangerous medical products remained on the market. Investigation revealed that Wilhelmina had been inappropriately denying pharmaceutical liability claims for over 400 injury cases while collecting approximately $170,000 from manufacturers seeking to avoid product safety obligations. Her fraudulent investigations cost patients millions in denied claims while dangerous medical products continued harming people without proper safety warnings or design corrections. Our 26th story occurs in San Francisco, where technology errors and omissions adjuster Andrew evaluated software liability and cybersecurity claims for TechGuard Insurance, handling complex technology insurance matters. He had worked in technology insurance for 8 years and was known for his understanding of software development and cybersecurity. When software company Dahlia faced massive liability from a system failure that caused client data loss, Andrew investigated what seemed like a professional evaluation of the technical circumstances and liability factors. He appeared very experienced with software development and system architecture, spending considerable time evaluating our system failure and client impact. Dahlia's technical director explained about the claims process. His technology expertise suggested our errors and omissions claim would be handled by someone who understood software liability. But Dahlia learned that Andrew had been deliberately undervaluing technology liability claims while accepting bribes from software companies who wanted to minimize client settlements and avoid system improvements. He would blame client usage factors instead of documenting software defects and security vulnerabilities, protecting software profits while clients received inadequate compensation for data losses and system failures. The conspiracy involved corrupt technology consultants who provided biased technical analysis supporting reduced settlements in exchange for future consulting contracts from software companies. Investigation uncovered that Andrew had been reducing technology insurance settlements by an average of 45% while collecting approximately $85,000 from software companies over 3 years. His fraudulent assessments cost technology clients over $6 million in reduced claim payments while dangerous software vulnerabilities remained unaddressed, potentially threatening data security and system reliability. Our 27th story unfolds in Houston, where space insurance adjuster Elena specialized in satellite and aerospace claims for cosmic risk insurance, evaluating spacecraft failures and space technology insurance matters. She had worked in space insurance for 9 years and was trusted to assess complex aerospace insurance claims and satellite technology issues. When aerospace company Francisco suffered a major satellite failure that disrupted global communications, Elena investigated what appeared to be a comprehensive evaluation of the spacecraft malfunction and business impact. She seemed very knowledgeable about satellite technology and space systems, spending considerable time evaluating our spacecraft failure and service disruption. Francisco's project manager recalled about the assessment process. Her aerospace expertise suggested our satellite claim would be handled by someone who understood space technology. However, Francisco discovered that Elena had been manipulating aerospace insurance assessments while collecting kickbacks from space contractors who wanted exclusive access to satellite replacement and repair contracts. She would minimize failure impact and underestimate replacement costs to reduce claim payouts, then ensure preferred contractors received lucrative aerospace projects at inflated prices. Investigation revealed that Elena had been operating this space insurance fraud for 4 years, reducing aerospace settlements by an average of 50% while collecting over $110,000 from space contractors. Her fraudulent assessments cost aerospace companies approximately $20 million in reduced claim payments, while space technology reliability remained compromised, potentially threatening global communications and navigation systems. Our 28th story brings us to Nashville, where music industry insurance adjuster Garrett handled recording equipment and tour cancellation claims for Harmony Protection Insurance, evaluating entertainment technology and performance insurance matters. He had worked in music industry insurance for 10 years and was known for his understanding of recording technology and concert production. When recording studio Isabella suffered extensive equipment damage from electrical failure, Garrett assessed what seemed like a thorough evaluation of the technology losses and studio business impact. He appeared very experienced with recording equipment and studio operations, spending considerable time evaluating our equipment damage and business interruption. Isabella explained about the claims process. His music industry expertise gave me confidence that our studio claim would be properly handled. But Isabella learned that Garrett had been deliberately undervaluing music industry claims while accepting payments from equipment vendors who wanted exclusive access to studio replacement and upgrade contracts. He would minimize equipment damage and underestimate business interruption losses to reduce claim payouts, then ensure preferred vendors received lucrative studio contracts at inflated prices. The scheme particularly harmed independent studios and smaller music venues that couldn't afford to challenge technical assessments or hire entertainment industry experts. Investigation showed that Garrett had been reducing music industry settlements by an average of 40%, while collecting over $75,000 from equipment vendors over 3 years. His fraudulent assessments cost studios and entertainment venues approximately $3 million in reduced claim payments, while corrupt vendors profited from exclusive access to replacement equipment contracts. Our 29th story takes place in Portland, where kidnap and ransom insurance adjuster Julia handled international security and extortion claims for Global Protection Insurance, coordinating crisis response and ransom negotiations worldwide. She had worked in security insurance for 12 years and was respected for her crisis management expertise and international security knowledge. When business executive Kenneth's daughter was kidnapped while studying abroad, Julia coordinated what appeared to be a professional crisis response and security operation. She seemed very experienced with international kidnapping situations and crisis management, providing guidance during an extremely terrifying experience. Kenneth remembered about the security response. Her expertise gave us confidence that our daughter's situation would be handled by professionals. However, Kenneth discovered that Julia had been manipulating kidnapping crisis responses while accepting bribes from private security firms who wanted exclusive access to high-value protection and negotiation contracts. She would deliberately prolong crisis situations and inflate security costs to maximize payments to preferred contractors while families endured extended trauma and uncertainty about their loved one's safety. Investigation revealed that Julia had been operating this security fraud for 5 years, inflating crisis response costs by an average of 80% while collecting approximately $200,000 from security contractors. Her scheme cost families over $8 million in excessive security fees while prolonging dangerous kidnapping situations and increasing psychological trauma for victims and their relatives. Our 30th story occurs in Denver, where livestock insurance adjuster Kevin evaluated agricultural animal and ranch liability claims for Rural Protection Insurance, handling farming and ranching insurance matters. He had worked in agricultural insurance for 11 years and was known for his understanding of livestock operations and rural business practices. When rancher Lauren's cattle herd was devastated by disease outbreak, Kevin assessed what seemed like a comprehensive evaluation of the livestock losses and ranch business impact. He appeared very knowledgeable about cattle operations and livestock diseases, spending considerable time evaluating our herd losses and ranch economics. Lauren recalled about the assessment process. His agricultural expertise suggested our livestock claim would be handled by someone who understood ranching. But Lauren learned that Kevin had been deliberately undervaluing livestock claims while accepting kickbacks from meat processing companies who wanted access to diseased cattle at below-market prices for rendering and processing. He would minimize disease impact and underestimate herd losses to reduce claim payouts, then ensure corrupt processors acquired affected livestock for minimal compensation while ranchers received inadequate settlements. Investigation uncovered that Kevin had been operating this livestock fraud for 6 years, reducing agricultural settlements by an average of 50% while collecting over $95,000 from meat processing companies. His fraudulent assessments cost ranchers approximately $4 million in reduced claim payments while diseased livestock entered the food supply chain without proper safety protocols, potentially threatening public health. Our 31st story unfolds in Miami, where cruise ship insurance adjuster Marcus handled maritime passenger and crew liability claims for ocean voyage insurance, evaluating cruise industry accidents and passenger safety matters. He had worked in cruise insurance for 13 years and was trusted to assess complex maritime liability and passenger injury cases. When passenger Nicole suffered serious injuries from defective cruise ship equipment, Marcus investigated what appeared to be a thorough evaluation of the accident circumstances and maritime safety factors. He seemed very knowledgeable about cruise ship operations and maritime safety regulations, spending extensive time evaluating our equipment failure and injury circumstances. Nicole remembered about the investigation process. His cruise industry expertise gave me confidence that my passenger injury claim would be properly assessed. However, Nicole discovered that Marcus had been manipulating cruise ship liability assessments while accepting bribes from cruise companies who wanted to minimize passenger injury settlements and avoid safety improvements. He would blame passenger behavior instead of documenting equipment defects and safety violations, protecting cruise profits while injured passengers received reduced compensation for serious maritime accidents. The conspiracy involved corrupt maritime medical staff who provided biased injury evaluations supporting reduced settlements in exchange for continued employment contracts with cruise companies. Investigation revealed that Marcus had been inappropriately reducing cruise ship liability settlements by an average of 60%, while collecting approximately $140,000 from cruise companies over 4 years. His fraudulent assessments cost injured passengers over $7 million in reduced claim payments, while dangerous cruise ship conditions remained unaddressed, potentially threatening passenger safety on future voyages. Our 32nd story brings us to Las Vegas, where casino workers' compensation adjuster Melissa evaluated employee injury claims and workplace safety cases for gaming industry insurance, handling casino and hospitality workers' compensation matters. She had worked in gaming workers' compensation for 9 years and was known for her understanding of casino operations and workplace safety regulations. When casino dealer Omar suffered repetitive stress injuries from years of card dealing, Melissa assessed what seemed like a professional evaluation of the workplace injury and occupational health factors. She appeared very experienced with casino workplace injuries and occupational health, spending considerable time reviewing our injury documentation and work conditions. Omar explained about the claims process. Her gaming industry expertise suggested our workers' compensation claim would be handled appropriately. But Omar learned that Melissa had been deliberately denying legitimate workers' compensation claims while accepting payments from casino operators who wanted to minimize employee injury costs and avoid workplace safety improvements. She would blame pre-existing conditions instead of documenting workplace injuries and safety violations, protecting casino profits while injured workers received denied claims and inadequate medical treatment. Investigation showed that Melissa had been inappropriately denying workers' compensation claims for over 300 casino employees while collecting approximately $80,000 from gaming companies seeking to reduce employee injury liability. Her fraudulent claim denials cost casino workers millions in denied benefits and medical coverage, while dangerous workplace conditions remained unaddressed, potentially threatening employee health and safety. Our 33rd story concludes in Phoenix, where directors and officers insurance adjuster Penelope handled corporate liability and executive protection claims for Executive Shield Insurance, evaluating management liability and corporate governance insurance matters. She had worked in directors and officers insurance for 14 years and was respected for her understanding of corporate law and executive liability issues. When Corporation Rachel faced massive shareholder lawsuits alleging executive misconduct, Penelope coordinated what appeared to be a comprehensive defense strategy and liability assessment. She seemed very knowledgeable about corporate governance and executive liability, spending extensive time evaluating our management practices and shareholder claims. Rachel's general counsel explained about the claims process. Her corporate expertise gave us confidence that our directors and officers' claim would be handled by someone who understood executive liability. However, Rachel discovered that Penelope had been manipulating corporate liability assessments while accepting bribes from law firms who wanted exclusive access to lucrative corporate defense contracts. She would minimize executive liability and underestimate settlement costs to reduce claim reserves, then ensure preferred law firms received expensive defense work at inflated hourly rates, while corporations faced inadequate legal protection. The conspiracy involved corrupt corporate governance consultants who provided biased liability analysis supporting reduced coverage in exchange for future consulting contracts from law firms. Investigation revealed that Penelope had been reducing directors' and officers' settlements by an average of 45%, while collecting approximately $180,000 from law firms over 5 years. Her fraudulent assessments cost corporations over $12 million in inadequate legal coverage, while corrupt law firms profited from exclusive access to corporate defense work, leaving executives vulnerable to personal liability and shareholder litigation. Thank you for joining me tonight on Drowsy Tales Daily, and may these stories guide you into peaceful sleep with renewed awareness of the importance of insurance accountability and protecting policyholders from adjusters who would exploit their trust during vulnerable claim situations. Sweet dreams. And I'll see you tomorrow night for another collection of fascinating Reddit stories designed to help you drift off to sleep.